Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for January 30th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame in the ES. You can see that price fell back below those 87 quarters, and after rejecting off the 25% expansion level for the month, it's 22.96 halves basically. Got within a half point of the 2300s, and we've now backed off. What I mentioned before is we continue to be in an overall uptrending market. However, it's been very, very quiet. Not a whole lot of volatility still. We had a little bit of a burst up right here, but typically speaking, the pullback still likely to be defended until proven otherwise. But that still implies that we could see more weakness, perhaps toward the previous month's high here, which is about 72s. So we could be looking at further weakness towards 72s here, especially if price cannot reestablish acceptance back above 87 quarters. So 87 is going to be very important here short term, and failure to get back above that zone could auction this thing back toward 72s. And then we'll be looking for signs that any pullback could be a buying opportunity to retest these highs and perhaps capture that 2300. If we take a look here at the intraday time frame, there we are. You'll notice over the last several days, obviously we had a squeeze, and then once you had a squeeze here, price basically went flat. We had a market that went flat, not a whole lot of volume or volatility. Very, very painful to be a part of in terms of attempting to actively trade this market. And that usually is a cue to stand aside. Stand aside and sit on your hands until a better opportunity approaches. In this current market right here, you can see we had a gap down Sunday evening. We just kind of held. And typically speaking, this would imply to look to fade the edges. Since we are short-term pulling back to the downside, it's safest to sell new highs than it is to buy new lows. But right now, it could be a fade the edges, fade new highs, fade new lows. So any pullback, perhaps into those 87s, could be a short-term selling opportunity for a pushback down toward lows. But again, you have to be patient and you have to let the opportunities come to you. Here's a look at the crude oil chart. This is the daily time frame I'm going to right here. And in a daily time frame sense, again, what I mentioned before is price is so tightly coiled right now that energy could release itself very, very soon. I mentioned that 54s are very, very important, and we saw tests at that level 2 days running and both times rejected. But we do have higher lows still in effect overall. And what I mentioned is if this thing can establish acceptance above 54s, there's going to be a lot of clear air above into 55s, 57s, 59s, etc. So, watching 54, 54 quarter for a shot at seeing confirmed breakout through that zone could push prices much higher. But until that occurs, we're still in the range. We're still in a tightly coiled pattern here. Not a whole lot of action in terms of directional movement, but we do have trading range edges to watch. 54s are offered right now, 52 halves are bid. So in a short-term sense, that's the range to watch right now until we do see confirmed expansion. And again, there's no guarantee that we break to the upside here above 54s. We've seen rejection after rejection, and if these bulls that have been defending all these pullbacks don't get paid, there could be a big drop back toward value, composite VPOC being 46.69. So again, we have to see which way this unfolds, and then we have targets to watch on either side. Here's a look at the intraday time frame. On an intraday basis right now, you can see the initial push has been up. Price dropped overnight here into support at 52.85s, and that's a zone where bulls came in and defended and pushed price above the previous week's close. Now the pullback into that close currently being defended with VWAP sloping higher. So right now you can see that bulls are attempting to keep the previous week's close bid, and between 53.20 and 53.10, that's a zone here where bulls may want to defend for a retest of highs and perhaps pushing it back toward the next LVN above, which is 53.60. Now this is a clear LVN right here. Any failure to get beyond that LVN could be an opportunity to fade it back to value. All right, let's take a look here at gold futures. Here's a look at gold in the higher time frame right now. Here's a daily. Again, with gold, we've had a significant push higher from these lows. After price failed to get a bid for so long, it finally pushed above those 1146 halves, We got a nice rally, and then here is a failed new high beyond the 1220s, and that led to a pullback. What I mentioned before was any pullback could be a buying opportunity. The first one was, and when it failed here, it got to push through that low, and the next key level below, we were looking for 1180 to be defended, and price got very close to getting to that 1180 and pushed higher off of it. Here's where it's going to get very interesting, because testing 1200 from below right now is a spot where bears want to come in and defend for a shot at pushing prices lower still. Bulls want to keep 1180 bid. So again, right now, not the easiest situation overall. We do have some key levels, and we got to see how the market responds to them. 1180 still a zone with a rejection tail here, so bulls want to keep prices above the previous month's high, and if that's the case, we could be looking at a retest higher. But again, right now we just got to wait to see how the things shake out between 1200 here and 1180. That's the zone where bulls are defending on one side, bears on the other. Here's a look at the NQ. The NQ also has had a significant little squeeze up throughout the month here. Low volume squeeze, not a whole lot of volatility despite what it looks like in a daily time frame. One thing we did see here was potential rejection occurring at these highs, while price was staying right here above the 50% expansion level for the month. We had a day of digestion here, and now an inside day developing here. So typically speaking, when you have this type of pattern after a push higher, bulls either need to keep 5140 bid, otherwise the stops are now at risk below that zone. So you can see that bulls have been defending off 5140s. Should price break through that area, you're likely going to see a stop run day where price just drives through all the stops back into 5100. So there could be a steady decline, about 40 handles here, should price give up those 5140s. Now, given the overall squeeze, again, from a swing perspective, that pullback could be enough to begin to bring bulls off the sidelines for a retest in the defense of that zone. So right now, any pushback into 5100 or even into recent resistance here, 5180, 5175, could be an opportunity for bulls to defend and squeeze yet again. But again, watch 5140. Any failure to hold that zone could re-auction these prices right back down. On an intraday basis here, you can see on an intraday we gapped down very similar to the ES. Again, failed new highs, and you can see a rejection of lows could be ahead here, but right now fading highs, fading lows is the approach. After you get a gap down like this, you can see they tried to push higher and they were rejected back down. So any pullback into that zone, again, 51.55 could be another area to look to defend. So fading new highs, fading new lows could be the approach. And again, if 51.40 cannot hold, here it is down here. 51.40 has had a lot of support over the last several days. So that means there's bulls that have been defending above this zone, and if they don't get paid, the stops will come out and you'll begin to see this thing auction right back through these prices in the 5100 and 50.75. All right, that's it for now. Let's see how this plays out heading into the new week of trading. Good luck, trade well, and happy Monday.